Mm. All right, so today was a backtesting session on Bitcoin USD. I'm really testing out this sort of the basic part of my strategy, which is to find a swing high and low, which is a liquidity sweep, and then a higher low pushing past that, which forms the order block that I'll be looking for retracements into. I believe I got a little sidetracked just seeing a bunch of just seeing a range like this and not exactly knowing which one was the order block. And I would pretty much just assume that this first one would be the order block. And then I kind of got into support and resistance, and it really just wasn't good at all, especially for my level where I really don't know. I'm very new to trading and I don't exactly know what I'm doing quite yet. So my strategy is to find a swing low in this case, and then eventually a swing low that pushes past that like this. And then this here would be the order block. That's one of the two possibilities. And then after that, I just wait for price to retrace into here, go on a smaller time frame, find a break of structure, and then long it. And then the other possibility is the same thing happens, but I kind of miss the price does not retrace back into this order block, and price just goes up to the moon, in which case it forms a fair value gap. And then I wait for price to retrace and then break structure and then um, long it. So that's pretty much my strategy. I've found 10 examples of this. I'm going to breeze through them as fast as I can. And without further ado, I'm going to get into these. Sorry. Sorry. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yep, okay. So starting with this trade, we have something fairly generic. We have a bit of a swing high right here. Price doesn't exactly push past it, but it pushes up to it, and there's really just this one little wick up here. So since it's sort of in a very similar range, I think I'd be willing to take a trade off of it. I find the one candle right here that makes the top mark, the mountain peak, and then I find later that price retraces into it. Price would have retraced into this fair value gap here, but price pushed past it. It keeps pushing past these fair value gaps, but then it retraces all the way into this order block and all the way through it doesn't go past the order block, but it goes all the way into the order block. So as soon as I get a break of structure off of this, short it for a 1.34 risk to reward ratio trade. I would really do the re-entry on a shorter time frame. I'm not going to do it for this sake, but I would go on to a shorter time frame, find when the a new low closes below a previous low, which would be the break of structure, and then I'd be good to go. And I could maybe get a slightly better risk to reward ratio trade. The second one is, I believe, relatively similar in the sense that, or not similar in the concepts where there's this low, there's this new low that's the same level as it. It makes this order block, which never quite gets hit, but there is a fair value gap and a fair value gap retracement, which does not get pushed past. I believe it gets very close, but it does not quite push past. And then off of this, I would go to a really small time frame as soon as I can find a break of structure. This is just the break of structure on the 1 hour where it closes above this high right here, and just long it targeting the previous area of liquidity up here, which would have gotten hit. And by the way, last time was stop loss above here, take profit below here, and this one's take profit is below here. Or sorry, stop loss is below here, take profit is above here. So this is a 1.68 risk to reward ratio trade. This third trade is with a this is another fair value gap retracement where Price dips down into here. Price, I believe, goes even lower. Yes, it does go a bit lower. Um, Forming this order block. Price goes up to the Actually, now that I see it, price does retrace into this order block, and then the break of structure is so stark that it makes another retracement. So I could take the trade off of this and get a 4.3 risk to reward ratio trade. But if I missed it, which is likely what would happen if I actually was in this market, I would have to take it off of this fair value gap and put my stop loss below the liquidity stop loss below here, take profit. Um, since it's so high up, we'd have to go a long ways away, likely up here, which would be 1.28 risk RR trade. This one would be right here. I believe this is an order block trade, not a fair value gap trade, where swing low, new swing low. It's not quite as low as this one. Although actually, I suppose you could argue that this is a swing low, this is the second swing low. But whatever the case is, so this is the swing low. This is the first swing low, this is the second swing low, which this I didn't even notice. But price still retraces into here, breaks structure right here. When price closes above this high, stop loss below here, maybe below here if I wanted to, and take profit up here. And I could likely, if I really wanted to, I could go back and put it up here or up here. And then this would yield a 1 to 2.35 RR trade. So this one up here, or this one all the way up here on this peak is liquidity is formed with an order block retracement. Um, this is the first one, or swing high, second swing high, which is higher than the first swing high. Then we get a retracement right here as soon as price breaks structure, which is right here where price closes below the low. Now that we're a bit closer to the today, I'm going to go on the 30-minute market and see if I can find a slightly better entry. Although it really looks like this just all happened at once. This is a big rug pull. Um, and this would just be the time to enter right here. Right here, actually, sorry. And then that would give me a slightly better, like a 1 to 1.7 RR trade off of the fair value. And of course, in the event that I miss this trade, price goes all the way up back here and it goes down. So I could get a retracement on this fair value gap if I wanted to. Right here, this is an order block trade where price hits a swing high here. Price pushes past the swing high, forming this order block. Sorry, I believe we're here. We were just at the rug pull. So right here, this is the last candle up. Price retraces into this zone as soon as it breaks structure to the downside. 1 to 2.35 RR trade with stop loss up here, take profit below here. And for this next trade, when price is all the way down here, um, must have forgotten to write what happened exactly, but we do see a big liquidity grab. Price goes up. Another swing low here. Price retraces into this general range multiple times, or this first range multiple times. As soon as we get a break of structure, I'd go. This trade's a little shaky because I don't see a clear second swing low. So this would just be a 0.25% trade. One to stop loss below here, take profit here, maybe up here, maybe even all the way up here for a 5% RR trade. And then, so that one's a little bit sketchy. So I don't know if I would take that. I think that might be the 11th trade. Um, so this one is very similar as well, where price hits the swing high, another swing high. This is the green mark, or sorry, this is a swing high, and then this is the big green candle that pushes the this is the green candle price range. Price retraces back into here. As soon as we get a break of structure, which we would scroll down, or I would scroll down onto a smaller time frame to find. I think we're yeah, we're right here. As soon as I find that smaller time frame or that break of structure, which is when it closes below here, I would short it, stop loss above here, take profits below here, and then 1 to 2 are our trade. Here again, we see a swing high, price dips a little bit back down, another swing high. This one's a little bit shady because I didn't exactly see two super distinct swing highs. Um, but we do get a solid retracement back into this order block right here. And we do get a break of structure right here, I believe, after price closes below this red candle right here for a 1.71 RR trade. Again, this trade's a little bit shady because it's just one area of consolidation instead of two distinct peaks, so to speak. So this would be a 0.2 or a 0.25% trade with a 1.71 RR. I believe this is the last trade. This is a we have a swing low and then or we have a swing low here, swing low at the same level, and then we get a bit of a retracement into that um, order block. I'm going to go down onto the 1 minute now that I can. Um, After we get retracement, we get break of structure out right here. I should mark um, right here on this candle. Stop loss below here, take profit on previous areas of liquidity here. I set it up to here. I could even set it up to here if I'd like. And that would be a 1 to 2.65 RR trade. So what I'm looking at for Bitcoin here is we see a swing low and then a new swing low that takes it out. Price doesn't really retrace into this order block right here, but it makes a very stark bullish candle. So what I'm looking at is a bearish or a fair value gap retracement into this candle. And then if I were to take the trade, which I'm not because Bitcoin's my secondary pair, um, I would just set it to be a stop loss below here, um, take profit above here. And that's what the trade would look like. Should price come and retrace back into this fair value gap. Overall, that's what Bitcoin has been. I believe Bitcoin's relatively not indifferent from USD Canada. I believe it respects fair value gaps and some smart money concepts a little bit more, given it's more or less independent from news, etc. And since I'm not very good at trading news and I'm not very good with a strict schedule, I kind of just trade whenever, which is a bad habit that I should break. I believe that Bitcoin might actually be a pretty good secondary pair. So that's why I'm looking at this more and more, and I believe that I'm going to continue doing this. Thank you.